What's up, traders? How are you doing? I hope you have been having a good week. This is Shocks, and this is Shocks Capital FX YouTube channel. And welcome back. If you are new here, guys, I welcome you to this channel. This is the place to be if you are a trader who is looking forward to grow and understand price action. So today we are going to talk about a very interesting issue, a very interesting topic: the market structure of volatility indices. How you can master the market structure, how can you master the price action of these indices. So if this is something you are looking forward to, watch till the end and see how to actually trade these indices. And if there is anyone who doesn't have or who doesn't know what these indices are, so these are assimilated indices. This is a broker called Deriv broker, and I have provided a link in the description down below for those who would want to get involved in the fund. So get an account, backtest these methods on this channel, and get involved with other traders. So let's get right into it, guys. So on market structure, and if you have watched some videos on this channel, you know that on market structure we focus on the highs and lows of a market depending on which side we are going. So as you can see, these horizontal lines, these purple horizontal lines on your picture right now represents the highs which the market has been breaking on this side of the chart. So this is break number 1, break number 2, 3, 4, 5 as we go up. So as you know, whenever a low or a high is broken, we turn our attention to some order blocks which are supposed, or which are high probability resistance and support mechanisms which we use. So this is what I'm going to be showing you here. I'm going to be showing you how you read market structure and how you use past data or past market structure or hindsight data to predict what the market is going to do in the future. So we start here where the market has been trending up. So as you can see, the market has been trending up, and the other method of predicting the market direction is by using the direction of the impulses. So as you can see from this chart, we have this impulse, we have another impulse, and we have what? Another impulse. So these impulses show us the what? Show us the direction of the market, or the direction the market is trending to. So these impulses can be called levels. If you have studied market maker method, you know that these are what? These are levels in the market which you can be following. So their direction is your direction. So whenever you see an aggressive move like this, you move your attention to what? To a retracement that is to follow after a break of market structure. So what you are going to wait for is a break of market structure. Then the other thing you have to understand when trading these indices is after every break of high or after every break of a low, you expect a reversal. So this is an easy way of expecting a reversal. Is this: you cannot know where exactly the market is going to turn and start. An easy way to look at the market structure of these indices is to look for these highs and lows. So for this first part of the chart, you are going to look at the highs. You are going to look at the highs, and as you can see from here, whenever we're breaking a high, there's something which is happening, which is a retracement. That is a retracement. So a retracement is coming after every break of structure. So this break of market structure, after every break of market structure, what are you expecting? So after every break of market structure, you're going to expect a retracement of price. So you can't tell where the retracement is going to start off from, or where the market is going to turn to start a retracement. So what you are going to do is you are going to focus on the areas where the retracement might end. So you are not focusing on where the retracement is going to start, like this one. So you can't really know that the retracement is going to start from this point. You are going to focus here on this order block or on this supply zone where the retracement is likely to end and continue the trend. So the trend is also shown by these impulses, as you can see. So the first impulse that breaks market structure shows you the direction, or shows you the decision the market has made in terms of the direction it is likely to take. So after this decision, let's just call break of market structure a decision today. So this decision has been made, price has broken market structure, then we are expecting a retracement back to a potential demand or potential order block that might hold price and commence another impulse, which then breaks another high. This high that preceded this one is also broken by this impulse. So after every break, you are expecting a retracement, but you are not focusing on where it will turn. You are not focusing on this point. Rather, you are going to focus on this one, on this area here, where the market or the retracement is going to end. Like in this case, so this being your order block is your focus, or is your area of focus you are going to be focusing all your attention on. So since you can't know where the retracement is going to start from, you better predict or focus on where the retracement is going to end. So that is the order block. So as you can see, price retraced back to our order block. Then we had this impulse again, which broke market structure. So as you can see from this one, we had this impulse again. So if you are a follower of this channel or a follower of my methods, you know that we are not going to consider this order block. Why? Because of this sharpness of a move, of this aggressiveness of this move. So we are going to ignore that, and after that you see a little box consolidation here, a little accumulation, and another aggressive move. So for your sake, for the sake of your money, you are not going to consider this order block. Why? It's not original, it's not fresh, so you are going to ignore this order block. But by the time price gets here, you will know that the trend has changed. Why? Because we have broken a major swing low, which now dictates, or which now tells us that price has turned. But before you know it, price breaks market structure to the upside again at this point. So whenever price breaks a market structure like this, we are saying a decision has been made. So where is our attention? Our attention goes to the order block. So this is a very good price accumulation, which we want to see as price starts approaching or starts coming back to retest the order block, like in this case. So now price makes another impulse, as you can see from this chart, breaks a high again. So this break is what we call a decision. So the decision has been made to continue going up. Where is your attention going? Your attention going to these order blocks in this area, and price did not come back to this order block. But I want you to see a very interesting fact here. You see, we marked this high with this line. So this can be called a support, a resistance, or some sort. But now see how price reacted to that area right here after breaking it. How many times? I don't even know. But now price has retested it, and if you zoom in that area, you see that we have this very beautiful order block. So this order block right here, which is responsible for break of this high, is now being tested 3 times, and price stop hunted just below this order block to this area of let's just call it support. And what the price do? Price breaks a high. Whenever price breaks a high, your attention goes to where the retracement might end, which is the order block, and price goes up. But now when you are marking all these order blocks, you are keeping your attention at this top order block, which was responsible for this move down. So this move down was caused by this order block. So your attention as you go up is also at this point, because this is an extreme. If you are someone who have used indicators before, you know these areas, we call them oversold, overbought, something like that. So we are saying these are extremes. So this is more likely to be your peak formation high. So you are keeping an eye on this area. Why? Because look at how price is moving back to that area compared to how price moved away from that area. This was a very aggressive straight line move, and look at how price is moving right now. It's coming back, consolidating in accumulation back to the zone, which signifies the importance or the strength of this zone in regards to it holding, or to the probability of it holding price. And look at what happened. This order block held price, and price fell like this in a straight line, breaking this market structure. And I want you to focus your attention at this point where price broke this one at this area. So this area is what was our major low, or our more defined low in this market structure as we were going up. Why? Stop hunted the order block, which means it took some liquidity here, and look at what it did to this area, which we agreed to call resistance here. So this was the order block that is very strong in that area, responsible for the break of this major high that took liquidity as price was going up. And look at how price reacted from that zone. This was a very good accumulation back to that order block, and you can call this, what do you call them? Symmetrical triangle, broadening triangle. I don't know, guys, you know it better. So this triangle is a price action. It's a price action pattern that some people trade, and you could have used this as confluence in trading this order block. So we don't trade patterns, we trade order blocks, but these ones can work as confluence to our trades. So this is it, and you can also be marking this order block right here. We actually took this trade in our VIP group, and the results are in the Telegram channel, which is in the description down below. You can join it if you want to. So this is the trade we took because, or based on this order block right here, after a break of this structure, right? So how price is moving right now, we can see that clearly we are in an uptrend, and we are having these impulses to the upside, as you can see. So what are we going to do? We are going to mark out our order blocks responsible for each and every impulse. So the first impulse was responsible for this break, then we mark this order block, and also mark this order block which was responsible for this break of structure. So this was respected, and price broke this high, as you can see here. So this high was taken out by that. Then we also mark this order block and this order block. So what are we expecting price to do? We are expecting price to come back to this order block and soar upward. So we are expecting a bullish move. So go to H4, we're just expecting this bullish scenario to continue. So this is our view on V50S on the H1 time frame. So this is what we are expecting price to do as we go. So today's date is 19 June 2021. So if you have seen this video before price comes back to this area, you can be looking out for this area and try to maybe catch trades at this zone. So guys, thank you for watching. It's been a pleasure. Trade what you see. I'm out.